Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? This picture definitely is a metaphor. When it comes to investing, there are many opportunities to choose from, but knowing which door to open makes a world of difference. So hopefully when you're doing any kind of investing whatsoever, that you're just not relying on the words of other people, that you're actually out there doing a little bit of research. Yes, you want to at least know something about the investments you're getting into. I can't tell you how many people I've spoken with that invest in cryptocurrencies and have no idea about what's going on with them. They just go with the flow. That's really risky when it comes to investing your money. Anyways, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so. Because when you do, it helps out the channel. And I surely do appreciate it. You know that if you are going to buy gold and silver, and you should, go check out our friends over there at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. Taking a look at cryptos still, although you can see right over here on the charts, cryptos still slowly but surely moving upward. Bitcoin at 41,800. Nice little recovery, but they still got a ways to go before they can catch their all-time high. Ethereum above the $3,000 mark. That's nice, $3,009. We have Cardano at $1.13. Solana at $113. XRP at 68 cents. Polkadot at 21.52. Dogecoin at 15 cents. Shiba, look at Shiba here. 4028. Nice. It's up 24%. Crypto.com's at 45 cents. And Algorand is at $1. If we look at the 52-week average, you can see right here that a lot of the dots are starting to head towards at least a halfway mark, which means they are halfway between their lows and highs over the last 52 weeks. Before we've seen the vast majority, well, we still kind of do, if you want to be honest. A good portion of them, I should say, is still over here towards the low side, with some, again, starting to head up towards the high side. We look at Saitama. It's at 7024. It's down 0.5%. So over the last hour, it's down 0.1%. Over the last 24 hours, it is down 0.5%. Over the last 7 days on average, it is negative 26.3%. Over the last 14 days, it's negative 11.8%. And over the last 30 days, it is negative 63%. Ouch. Saitama is having all kinds of problems. I know they're trying to work things out. This is normal when exchanges first open. People have all kinds of problems with them. We could look here at some of these people's older tweets when it came to dealing with Coinbase, when Coinbase first opened up. You can see right here that people were complaining. They had troubles. Coinbase did. It's one of the most used platforms now. What about the fact my coins and I can't trade them out? What a joke. Coinbase users received a notification. Bitcoin price surged 7% 2 hours ago. Coinbase goes down 1 hour ago. I can't read over it, but I'm guessing she's saying, being complete newbie at trading like myself, noticed the correlation here. So what the person's trying to say is, look, it's no coincidence that Bitcoin's going up and people can't access their cryptos. Yeah, I could tell you, it's usually when the markets really start to crash, you'll have problems with Coinbase. The other one said, I missed my trades this morning. You had no problem taking my $95. I cannot even access my account. Thanks for locking my account and responding to my tickets. I missed my opportunities because of this nonsense. My guess is, and not responding. So you can see exchanges have problems when they first open up. So that's why it's no big deal. I'm waiting for Saitama to work out all the kinks and then see where it goes from there. We can see silver markets already open. Silver at $22.68. This little crazy thing happening here looks familiar. Something like this always happens when the markets first start to open. I have some interesting news to share about gold and silver. Look at this. And there's reason to believe that they're finally going to start letting gold and silver run. Taking a look at gold, it's $1,810. Look at the 1 hour chart. There's these weird dips that keep happening. Now, again, the market's just barely open, but it starts getting later on, you might see these all over again. As long as it keeps making progress upwards, like here, and I'll take that little dip, and just as long as when you recover on the same day, it is higher than when the day started, I'll take it. So I wanted to look at Bitcoin because people keep asking about this Wyckoff. I heard about the Wyckoff a while ago. I looked at it. It's not like I mastered it. There was a gentleman who did a video. He overlaid the graph over the 2017 and then again in 2020. And it almost fits to the T. It was freaky to see. So if that's the case, then let's just go with the assumption that indeed that Bitcoin's being manipulated and that what method they're using is the Wyckoff. If that's the case, then we can almost predict what's going to happen with Bitcoin. So that's what I'm talking about. Here we go. Look at a slow climb since, what is this? What is about $35,000, $30? That was on January 21st. Here we are on February the 6th. It's at $41,910, almost at 42. So it's making its move. It's going slow. It's a healthy growth. It's not taking off. It's not doing anything crazy. The vast majority of cryptos are heading in the right direction, at least the big name ones. We saw Shibas today, Bitcoins. Ethereum's above 3,000. Again, what's that saying? High tide lifts all boats. Bitcoin's a high tide. When it goes in a positive direction, all the other ones go as well, which is something I don't like, but at least it's predictable. I want to play a small part of Liberal Hive Mind's video. He's reporting on the recently reported fake jobs number by Biden. When we do this small clip, when I'm done, we'll speculate on what's really going on, but let's hear what he has to say real quick.
And that the data has been manipulated. The January jobs report is fake news, and here's why. Stocks were down this morning amid a big January jobs report beat. Yields jumped too in response to last month's far better than expected payrolls data. 467,000 jobs were added in January, according to the Bureau of Labor Statistics, surpassing the 150,000 payroll estimates with ease as unemployment climbed to 4% from 3.9. The BLS also adjusted December's payroll gain from 199,000 to 510,000, and November's total jobs added from 250 to 647. It was a huge shock to Wall Street analysts, many of whom predicted a major jobs contraction. Even the White House warned last week that the jobs number would come in low due to the Omicron variant. Instead, U.S. labor roared. Or did it? While the headline print was impressive, a deeper dive into the January jobs report showed that what truly drove the 465,000 payroll gain, a massive, unprecedented seasonal adjustment by the BLS. Unadjusted payrolls actually fell in January, as they often do. Historically speaking, many holiday-related jobs are no longer needed as the economy transitions from December to January, and the BLS uses seasonal adjustments to account for the resulting reduction in employment. And while there's usually a significant tick lower that needs to be adjusted for in January, last month's post-Christmas drop was a doozy. 2.8 million jobs were lost in January, unadjusted, meaning that the BLS adjusted last month's job numbers higher by over 3.2 million payrolls to reflect the 467,000 payroll gain, which included adjustments for seasonality, the COOF, and population, the last of which is done every January each year. The seasonal adjustment alone totaled 309,000 jobs, the most ever for the month of January. But the BLS didn't stop there, also revised the lower jobs data from March to July by removing 1.061 million payrolls. August to December saw an upward revision of 817,000 jobs. This calls into question virtually every jobs report released in 2021. January's report, however, was truly special. As we just mentioned, there had never been a January seasonal adjustment of this magnitude. The population adjustment was huge too. And so we can go deeper into the data, but the point is the BLS literally adjusted the numbers by the millions, the biggest ever seen, right in time for Joe Biden to take his victory lap, and right in time for Joe Biden to potentially, or at least attempt, to salvage his image on the economy at the 1-year anniversary mark. It seems fishy, frankly, it makes no sense. Something is going on. It doesn't make sense that Joe Biden would absolutely shatter expectations by hundreds of thousands of jobs, and the markets would stay completely stagnant.
Exactly. The market stayed completely stagnant. See, this is what I'm telling you. All data is manipulated. You can't trust it. There are other things you have to look for. Sure, we still watch the numbers. You got to watch what people are doing, not what they're saying. That goes for corporations. Nothing that's happening in finance makes sense. The way the stocks are responding, the way gold and silver is responding, the way Bitcoin is responding, the way they're reporting inflation, the way they're reporting their jobs numbers, we all know it's just BS. If all the stuff they were saying was true, you would see responses in the market. Since 2008, they have artificially been pumping up the markets through quantitative easing. It's all fake. Still take advantage of it. How long is this going to go on? The fact that you have the BLS now lying about the numbers. Later on, he goes on in the video to say one of the things they did, and I told people this was happening. When it went and adjusted all those numbers for the year, what'd they do? They went back and did the same thing that Obama did. They went back and said, everybody who ran out of benefits is considered now employed. No, it's not. They ran out of benefits. But seriously, how often do citizens run around and go, you know what? I'm going to go take a look at the jobs report. Oh my goodness, I wonder how many of them ran out of benefits versus not. I mean, people don't care. You know, you're sitting there, you listen to the news about it, and you're assuming that they're telling you the truth. But they're not. They're artificially trying to keep this sucker afloat. It's going to crash in a bad way, and this is why you should be in the gold and silver. If you've never gone to listen to Liberal Hive Mind, I highly recommend you do. He's got a lot of great videos over there. So this here is Gold Silver Pros. We're just going to listen to a small clip. This is Robert. I believe his last name is pronounced Keats. But I want you to hear what he has to say real quick. Something near the middle of January. It's interesting. Let's listen.
Yes, we're bringing back the Commitment of Traders report. This is as of January 11th, 2022. This is the latest one from the CFTC. You can see right here, cftc.gov. And we've seen something on this report that we haven't seen in an awful damn long time. I mean, a long time. This is the Silver Commodities, Commodities Exchange Incorporated. This is silver. This is a disaggregated commitments of traders. And why do we care about that? Because it gives us reportable positions. And these are all the reportable positions that we have. You can see that the highest short position at 43,334 contracts, 30% of all open short interest is in the producer merchants, which makes sense because a lot of the producers will take a short position to hedge their downside price risk. The swap dealers, ladies and gentlemen, are net long. Look at this. 39,120 contracts of 5,000 ounce silver long and only 38,895 short. Yes, ladies and gentlemen, the bullion banks, aka the swap dealers, have gone long silver. When in the hell have we seen this in the last few years? I can't remember a time.
So you hear Robert. Now his video came out on January the 18th. He said the banks are going long. They're not shorting the contracts no more. For those you don't understand what short and long is, when people short contracts, that's because they're expecting the price of the silver to go down. When people have long contracts, that's because they expect the price of the commodity to go up. What he's saying is they're seeing more long contracts than there are short, and they haven't seen that in a dang long time. That means they're predicting silver to go up. This was done just yesterday. That's Dave Kranzler. It's on Chris Marcus's channel, Arcadia Economics. Let's listen to what Kranzler has to say.
The short position for the banks dropped by about 5,000 contracts. That may not sound a lot, but in the context of the size of the positions and the size of the trading that goes on the COMEX and silver, that's pretty decent sized drop. Because it also, again, just this is from the top of my head, I think the net short position for the banks is about 4,000 contracts, and it looks like the banks might be headed towards going net long again, and that's usually a very bullish indicator for silver. In gold...
Wait, real quick before he goes on with gold. Same thing that Robert was reporting. The short contracts have been lowered. In other words, the number of people who believe the price of silver is going to go down has changed. There's less people who believe that. There's more people who believe that the price of silver is going up. But it's the fact that it's these bullion banks, these swap dealers. When you see them do that, remember, they're the ones that manipulate the market. That should tell you what you need to know about gold and silver. When they move from a short position to long, they're anticipating the price going up. Or I shouldn't say anticipating, considering they manipulate it. Let's continue.
The banks covered 25,000 gold contracts, and this data is through Tuesday, mind you. And that's a big drop in the short position for the banks. And I don't remember off the top of my head what they did with their long position. It's not a lot, but the net of it is the net short position for the banks went down by 25,000 contracts. And at the same time, it looks like the hedge funds were the ones who were selling their long positions, so the banks could cover the shorts that they sold to the banks, probably, well above 1,800. So again, when you see repositioning like this on the COMEX, it's usually a pretty bullish indicator. When you see a big move like this, I think it's significant. And in terms of this particular type of move, reducing the net short position by a considerable amount and the hedge funds reducing their net long position by a considerable amount, that's historically always been very bullish.
Usually you don't want to get overly excited when it comes to certain news that you hear out there because you try to stay grounded. But at least that's some really good news for gold and silver. The fact that the number of people who believe the price in silver and gold is going to go down has drastically reduced. And the number of people who believe the price of gold and silver is going to go up has increased. Now, you heard what he said. They have the hedge fund managers selling their longs to the banks to cover their shorts. That's because they all work hand in hand in this manipulation game. They're anticipating a run for gold and silver. Now, what I heard is they're expecting gold to at least reach $3,000. So what are we looking at? If we're sitting around 1,800 and they're expecting gold to reach around 3,000, well, that's a $1,200 gain. Not too bad. That's almost doubling. That's just the prediction we're going to see. Now, here's the thing. If all things are equal and gold and silver's ratio goes back to where it normally is, which is around 15-1, well, then that would give you silver at $200 an ounce. I'll take that all day, every day. All right, anyways, we're going to keep an eye on it now because watching Bitcoin move the way they do, there's a huge part of me that believes that this is just a way to keep people distracted from gold and silver and keep you excited when it comes to cryptocurrencies. And that's why you're seeing it being manipulated along the lines of the Wyckoff. But like I said, look, there's nothing wrong with being diversified just in case. For me, everybody knows most all my money is in the gold and silver. Again, I never feel like I have enough. And now to watch the bullion banks start to lower the amount of short contracts and start looking at the increase in long contracts, they're anticipating the price going up. So this could be a very interesting year for both gold and silver as well as cryptos, because if cryptos continue to follow the Wyckoff, then you're going to see Bitcoin more than double its all-time high. Now, there's no guarantee. It's all speculation. If you could pick up on the trends and pattern, then you could benefit from it. You're going to know when to buy, when to sell, just like they do. And that's going to help you make a lot of money. But to keep your money safe as well, you definitely want gold and silver, and you want it outside the system from when they're going to try to force us into the central bank's digital currency. I just thought that news was interesting. 2 different people, 2 different channels. One was for the month of January, one is for the month of February. They continue to lower the amount of short contracts and longs increase. That's great news for gold and silver. Anyways, that's it for now. You guys hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.